Welcome to Matters Financial and Geopolitical from a Frontier. I trust you had a great weekend and looking forward to the new week. I like this. I actually went to the Paponi School Founders Day, which I went to last year, and thoroughly enjoyed myself. And it's really a wonderful synthesis of poetry, readings, music, and all extremely uplifting. And on the front of the card was said, "Keep your face always toward the sunshine and shadows will fall behind you." And I thought that was pretty good. I'd like to thank Bonnie Tunya for having me on his CNBC Africa show this morning. Thank you, Bonnie. And I'd like to thank Mr. and Mrs. Bharat Thakra for a lovely dinner on Friday. Thank you for that as well. I'll put up an image of the dinner table, which was really excellent. The food was delicious, as it always is. Bharat is a gourmand of extraordinary proportions. My piece over the weekend was "Who Kneecapped Oil? The Exponential Non-Linear Collapse in the Price of Oil." The oil markets had been roiled, with WTI touching $83.59 on Friday, which was the lowest level since the 3rd of July 2012, before a short covering rally took the price back to $85.11 a barrel. WTI has slumped 15% over 90 days, and that's a meaningful move. Closed Friday more than 20% below its June peak, a common definition of a bear market. Brent crude is down 22% from the June high, reached $88.11 on Friday, which was the lowest since December 2010. I've followed the oil market for eternity, and the recent price action is best characterized as unprecedented and white-knuckle. In fact, the oil market has always been very high beta and exhibits magnified price reactions to the demand and supply dynamic. Where markets are net short, price setting can be set by the last buyer who is paying up in a net supply deficit scenario. And that's why you occasionally see those enormous price spikes around futures expiring. But this is, of course, a binary thing. In a situation where there is a net surplus, the price setter can become those last sales transacted at deep discounts. The conditions, and I will explain them momentarily, are optimal for a complete washout or a blow-off bottom, was a more earthly description from my time. Down as far as $50. Yes, $50. Markets overshoot, crude oil overshoots big time, and any and every model needs to consider such a price outcome. In fact, the oil market has always been very high beta and exhibits magnified price reactions to the demand and supply dynamic. As I said, the big game changer has been US crude output, which rose from 5.7 million barrels per day in 2011 to 8.4 million barrels in the second quarter of 2014, and touched 8.88 million barrels a day last week, the most since March of 1986. OPEC as well increased output by 402,000 barrels a day in September to 30.47 million. The group said in its monthly oil report that this represented the biggest monthly gain since November 2011. Iran and Saudi Arabia offering their oil at their deepest discount since 2008. And essentially the global system is awash in oil, and the US has displaced a lot of imports, and these displaced barrels are being offered at fire sale prices. President Obama and his administration is the answer to my question, who kneecapped oil? In fact, as long ago as 2011, Thomas Donilon, who was then a national security advisor, was signaling this, and very clearly. He said in 2011, "America's new energy posture allows us to engage from a position of greater strength. Increasing US energy supplies act as a cushion that helps reduce our vulnerability to global supply disruptions and price shocks. It also affords us a stronger hand in pursuing and implementing our international security goals. The US administration has turned price slasher, and like in Alfred Hitchcock's totemic movie Psycho, oil has been sliced up real good. The US has flooded the oil market, and oil is now a geopolitical spear. This was Michael Clare and Tom Engelhard. It is the US that is the new price setter for the oil markets, and this is a deep and important geopolitical development. The new price levels will have immediate and enormous geopolitical and financial knock-on effects. It will place intolerable pressure on the oil producers, and particularly those who are operating from a higher base price. It is not too difficult to calculate who are the biggest losers in this new price normal. Vladimir Putin's Russia springs to mind first. As I previously mentioned, the pivot to Asia is, in my view, a naval blockade strategy aimed at cutting off China from its imports of crude oil. Between now and 2040, the IEA predicts US oil imports will fall from 9.5 million barrels per day to 6.9 million, while China's will rise from 5 million to 14.2 million. Sea power, US sea power, will be concentrated in the Indian Ocean. That's why I've been speaking about the Indian Ocean so often. And the East and South China Seas, the major maritime thoroughfares through which China receives its imports. And there are a few choke points which, if you can control, you can essentially cut China off. Let me jump now to the Emirates CEO Tim Clark, who was interviewed by Der Spiegel about MH370. Spiegel Online, and what do you think happened? Clark: my own view is that probably control was taken off that airplane. Spiegel Online: by whom, or what do you think happened? It's anybody's guess who did that. We need to know who was on the plane in the detail that obviously some people do know. We need to know what was in the hold of the aircraft. Spiegel Online: if that is the case, then why would the pilot spend 5 hours heading straight towards Antarctica? Clark said, if they did. My point is that Barack Obama has taken control of the crude oil cockpit. He is in charge of the aeroplane. He has control of all the instruments, and it's been a wild ride for the last few weeks, and it could get a whole lot wilder. I'll put up a 6-month chart of crude oil, and then via an article in Asia Times, this is by Pepe Escobar, he was writing about a flying visit to Tehran, and he mentioned somebody called Paul Virilio. And over the weekend I started to read some of Virilio, and it interspersed my daily podcast. This caught my attention. The logic of acceleration lies at the heart of the organization and transformation of the modern world. I thoroughly enjoyed myself at the cross country at Kenton. Hannah came, I put up an image of Hannah starting her group, and she said to me, I came 33rd, a little disappointed, and I said, that's fantastic. And it was, in my view. And I'm sure she'll do a lot better next year, as I told her. This caught my attention. Infinity, mirrored room filled with the brilliance of life, an installation by Japanese artist Yayoi Kusama in Mexico City. Political reflections. Mr. Erdogan is assuming he can disregard the rage of the Turkish Kurds at what they see as his complicity with ISIS against the Syrian Kurds. Turkey is demanding a high price from the US for its cooperation in attacking ISIS, such as a Turkish-controlled buffer zone inside Syria where Syrian refugees are to live and anti-Assad rebels are to be trained. Mr. Erdogan would like a no-fly zone, which also be directed against the government in Damascus, since ISIS has no air force. If implemented, the plan would mean Turkey, backed by the US, would enter the Syrian civil war on the side of the rebels, though the anti-Assad forces are dominated by ISIS and Jabhat al-Nusra. And in this article, which by the way is The Independent, it is worth keeping in mind that Turkey's actions in Syria since 2011 have been a self-defeating blend of hubris and miscalculation. At the start of the uprising, it could have held a balance between the government and its opponents. Instead, it supported the militarization of the crisis, backed the jihadis, and assumed Assad would soon be defeated. This did not happen, and what had been a popular uprising became dominated by sectarian warlords who flourish in conditions created by Turkey. Mr. Erdogan is assuming he can disregard the rage of the Turkish Kurds and what they see as his complicity with ISIS against the Syrian Kurds. This fury is already deep, with 33 dead, and is likely to get a great deal worse if Kobani falls. And I think Mr. Erdogan is ill-advised in his current course of action, in my opinion. Interestingly, and this is something, I remember talking about photography and how it can be much more powerful than any written word. And look at this photograph that the Iranians chose to publish of the Iranian General Soleimani with the Peshmerga and Korma II. Badr Kuma, of course, always insightful. NATO slouches towards Syria. Iran draws a red line. Tehran has come out openly today warning Turkey against making any move which will further exacerbate and complicate the conditions in the region and have irreparable consequences. Foreign Ministry spokesperson disclosed that Tehran had made a démarche with Ankara to act with great circumspection. The Iranian reaction is sharp, amounts to a warning. Things are getting to be rather explosive. Why such a sharp Iranian reaction? Saying that evidently Tehran has seen through Turkish Prime Minister Erdogan's game plan, which is playing out on three templates. Erdogan visualizes that the US-led air campaign against the Islamic State won't suffice to curb the extremist challenge, and there is going to be need for boots on the ground. He knows Turkey is the only country which is in a position to deploy ground troops to strengthen the US's strategy against IS. So he's put forward a precondition. Essentially, he will play ball, provided the US reworks its anti-IS strategy in Syria to include regime change. He's a great writer and is well worth reading. And you will recall that Erdogan was very hard line with President Obama regarding Syria previously, regarding the tripwire, the red line tripwire that President Obama had put out, and a lot of people speculated that, in fact, that was an Erdogan trick, as it were, that President Obama neatly sidestepped then. So it's very fluid then, well worth watching. The Administration of Fear, Paul Virilio, you must just put him into Google and have a look at what he's saying. Brilliant. We're living under the Administration of Fear. Fear has become an environment and everyday landscape. There was a time when wars, famines, and epidemics were localized and limited by a certain time frame. Today, it is the world itself that is limited, saturated, and manipulated. The world itself that seizes us and confines us with a stressful claustrophobia. Stock market crises, undifferentiated terrorism, lightning pandemics, professional suicides. Fear has become the world we live in. The administration of fear also means that states are tempted to create policies for the orchestration and management of fear. Globalization has progressively eaten away at the traditional prerogatives of states, most notably of the welfare state. And states have to convince citizens that they can ensure their physical safety. In another piece talking about the logistics of perception, the use of images and information in war, he believes the growth of technology, namely television, separates us directly from the events of real space and real time. In it, he suggests we lose wisdom and sight of our immediate horizon and resort to the indirect horizon of our dissimulated environment. Dromos is the Greek noun for road, but Virilio takes it to mean the activity of race. It is with this meaning in mind that he coins the term dromology, which he defined as the science or logic of speed. Dromology is important when considering the structuring of society in relation to warfare and modern media. He notes that the speed at which something happens may change its essential nature, and that which moves with speed quickly comes to dominate that which is slower. Whoever controls the territory possesses it. Possession of territory is not primarily about laws and contracts, but first and foremost a matter of movement and circulation. Brilliant, really. In contemporary warfare, logistics does not just imply the movement of personnel, tanks, fuel, and so on, but also the movement of images, both to and from the battlefield. Virilio talks a lot about the creation of CNN and the concept of the news hound. The field of battle also exists as a field of perception, he says. The first deterrence, nuclear deterrence, is presently being superseded by the second deterrence, a type of deterrence based on what I call the information bomb, associated with the new weaponry of information and communications technologies. Thus, in the very near future, it will no longer be war that is the continuation of politics by other means. It will be what I have dubbed the integral accident, that is, the continuation of politics by other means. And still, I like this best. The speed of light does not merely transform the world, it becomes the world. Globalization is the speed of light. Talk about info wars, not traditional war, where the images produced are images of actual battles. Rather, it is a war where the disparity between the images of battles and the actual battles is derealized. To be sure, for Virilio, wars are no longer about confrontation, but about movement, the movement of electromagnetic waves. And this is what I found interesting. In Virilio's universe, therefore, people no longer believe their eyes. Do you remember that Marx comment, who are you going to believe, me or your own eyes? For him, their faith in perception has become slave to the faith in the technical sightline. Now, I wrote about this before, about one of the defining bifurcations of the future will be the conflict between information masters and information victims. This information warfare will not be couched in the rationale of geopolitics, but will be spawned like any Hollywood drama out of raw emotions, hatred, jealousy, greed. Emotions rather than strategy will set the terms of information warfare struggles. Now, going back, I use this quote in my piece, the Emirates CEO, we have not seen a single thing that suggests categorically that this aircraft is where they say it is. And I think he's completely correct, I'm afraid. And it's well worth reading the entire interview, which was on Spiegel Online, and you can get to it via Rich Wrap-Ups. It was His Excellency Johann Borgstein who told me the signal announcing this new arrhythmic normal was the disappearance of the MH370. Since then, planes have been falling out of the sky like flies. Now, I said the uncertainty around MH370 and MH17, besides the fact that I think the current explanation in both cases is not the correct one, is sharpened by the way the story is seemingly turned on and off, taking me back to Don DeLillo. We are not witnessing the flow of information so much as pure spectacle or information made sacred, ritually unreadable. The small monitors of the office, home and car become a kind of idolatry here where crowds might gather in astonishment. These paintings found in Indonesian caves have changed our perception of when we first began to create such images, and it's pretty haunting stuff. I came across this, Apocalypse Now, by Christopher Wool in 1988. Apparently it's risen 350,000% in price. And the latest video that IS have put out, the message that's sent is, yes, America tried to rescue us, but instead of sending all those millions of dollars, sending ninjas, commandos, and risking countless more lives like it was a Hollywood action movie, wouldn't it have been safer and wiser to have discussed options for prisoner exchange in the first place? Currency markets, the euro is at $126.92 index, softened up a little bit in the last few sessions, 85.66, but I think this represents an entry opportunity. Japanese yen, 107.14, this is the strongest level since September 16. Swissy 0.9524, the pound 161.17, Aussie 0.8735. Touched 0.8643 on the October 3rd, which was the lowest since July 10, but it's had a bit of a bounce. South Korean won, 6-month lows, 1067.35. Rial 242.53, Egyptian pound 710.92. And some interesting news, they've paid back $500 million to Qatar. South African Rand 1108.87. I'll put up a 3-month chart of the dollar index. I remain very, very bullish about this index. I think this is an entry opportunity. Euro dollar, put up a 3-month chart as well. I expect that to slide towards 120 before year end. Gold, that's turned a little bit higher, 1232.535, rallied 1.2% to get to the highest since September 17. Rose 2.7% last week, but I think essentially it's headed lower because of a stronger dollar. Crude oil, $83.82. Both Brent and WTI are in bear markets. The extended decline is compounded mainly by supply-driven concerns. But you remember what I was reading about. I think it's very much an engineered collapse in the price of crude oil. Has important repercussions geopolitically. Frontier market multinationals propel growth. This is referencing the outperformance in the frontier markets index versus emerging markets. Saying that in 2013, EM index fell 2.6%. While the Frontier Index gained 26.3% and seeing a similar outperformance this year as well. Coming to Africa, the big news was actually in Texas, where a Texas health worker contracted Ebola, was apparently wearing full protective gear, gown, gloves, and mask and shield. We're talking about a protocol breach, or that's what the CDC head is talking about. But, let me leave one thought with you. The tail risk that Ebola mutates into an airborne virus, and the speed of mutation that we're seeing at this point in time is unprecedented and non-linear. That tail risk is something I think that the protocol breach, Dr. Frieden at the CDC, is simply not prepared to consider, apparently. And there's been quite a bit of criticism about this protocol breach. There's a link to an article in Reuters. Lagarde said we should be very careful not to terrify the planet in respect to the whole of Africa. And she was wearing a large button on her lapel declaring isolate Ebola, not countries, which was given to her by President Condé. Everybody's running away from Ebola by default or design. It really is an economic embargo. I'll put up an image of the spread of the Ebola outbreak. I came across an article in Global Research where they're saying the epicenter of the current Ebola epidemic is the Kenema government hospital in Sierra Leone. I can't speak on that. You will remember Joshua Lederberg, who said the single biggest threat to man's continued dominance on this planet is the virus. South African all shares now up just 1.8073% this year. It has crashed 5,150 points since closing at a record on the 29th of July. It fell 2.16% on Friday. Dollar Rand 11.0887. I think 12 is the likely objective. Egyptian pound stronger, and that's on the news that they've paid back $500 million to Qatar. Egypt has transferred $500 million on October 1, will refund $2.5 billion at the beginning of October because they did not ask for renewal. Qatar remains on the wrong side of the GCC Saudi Arabia Kuwait fault line. I'll put up an image of Doha from the sky taken 16 days ago. The Egyptian stock market fell 4.06% on Sunday. But it remains 35.1076% higher year to date. Nigeria's all shares at 18-week lows. Let's see how the currency behaves now with a very weak oil market. Nigeria's all shares down 2.141% this year. Ghana Stock Exchange up 3.636% in 2014. Ghana's has the highest domestic bond yields because consumer prices have accelerated for a 12-month to 15.9% in August budget deficit, but the IMF is coming in, and I think the Eurobond will continue to outperform. Interesting piece in Africa Confidential of the World, according to Khartoum, talking about the circulation of what purport to be detailed minutes of a meeting on 31st August of top security and military officers in which they discuss arming Riek Machar, rebels in South Sudan, supporting armed jihadists in Africa and the Middle East, Libya particularly, destroying crops in South Kordofan to starve out rebel supporters. If Khartoum's support for Riek Machar's forces is further confirmed, complicate tortuous peace negotiations with the Juba government. entitled Management of Military Activities. The document dated 1st September is set out as an account of a meeting at the National Defence College on the previous day. Through a circuitous route, the documents will pass from a dissident within the security structure to oppositionists, we were told. The documents refer to the meeting. It's very interesting. Do have a look. Orange is weighing the IPO of its African and Middle Eastern units. The news was reported on Thursday. Orange has 91.8 million customers in about 24 African and Middle Eastern countries. No decision has been taken regarding the exact details of any such project, and no calendar has been defined. Revenues in Africa and the Middle East climbed 7.4% to 2.1 billion euros in the first half of this year. Tala Oil says it's facing worker unrest at Kenya's exploration blocks. Limited industrial action on employment issues is taking place at a limited number of our sites in northern Kenya. The action concerns the subcontractors of one of Tala's suppliers, it said in a statement. And really, when it comes to stakeholder management, Tala Oil are proving singularly ham-fisted, in my opinion. BAT Kenya closed at a fresh record Friday. It's posted a total return of 72.08% year to date. It's a preeminent dividend-paying stock, and we've got a declining interest rate environment, in my view. Particularly post the oil price action we've seen of late. Uchumi has been given the go-ahead to raise about 1 billion shillings in a rights issue next month. Frankly, 1 billion shillings is not really enough if you want to play with the big boys. Uchumi has fallen 48.84% year to date. I expect a meaningful rebound here. Nairobi All Share up 18.946% year to date. NSE 20 below 5,300, but up 7.186% year to date. Olympia Capital reported first half profit before tax, rallied 69.74%. The share price has rallied this year 88.043%. Interestingly, they're talking about a 500 million shilling real estate plan to redevelop some land they have in the industrial area. That seems to be the flavour of the month as a way of unlocking value for shareholders at the moment, and quite rightly so. I wonder why it's taken people so long. Once again, thank you for stopping by. I do appreciate it.